G'day folks, and welcome to the Rough Consensus podcast, where today we've got our first repeat guest, and that is Larry Lepard. Now, Larry's hot off the press, having just released The Big Print, which is his new book telling really the story from his perspective and from his eyes of how the monetary system and the financial system came to be in the position that it is. And really, it kind of tails towards why Bitcoin and gold and sound money in general are just such a common sense and a sensible solution for the average person to really navigate what can be quite choppy financial waters. So I had a lot of fun with this conversation. We talked about everything from Bitcoin to gold to silver and just understanding how the overall pieces might work with a Bitcoin reserve, with stable coins, how just the general framework is likely to change as we move forward. So I think you're really going to enjoy this conversation. Let's get stuck into it with Larry Lepard. And just a quick reminder before we get started, do head over to checkonchain.com. You'll get access to our full charting website, which is free and has pretty much any Bitcoin chart you could possibly want, from on-chain data through to derivatives and ETF metrics. And we also have a live newsletter, which gives you 2 market updates per week. We focus on what's going on in the market, what are the different tools and metrics I'm using to understand what's going on. And we also have a masterclass section that helps people really understand the nuts and bolts of how these metrics work and how to use them in your own analysis. So head over to checkonchain.com, and I hope you enjoy the episode. Cheers. G'day folks, and welcome back to the Rough Consensus podcast. We've actually got our first repeat guest, and I think you've got a new title now, which is author. Welcome back, Larry.
Yeah, thank you, James. Wow, that's an honor to be your first repeat guest. I love the first one, and now you're going mainstream, huh?
Yeah, and I mean, look, this is the thing, right? You've just got a book out, The Big Print, which is, I thought it was a fantastic title. Here we are. I've actually got my paper book is on order, but Amazon was telling me you've sold out. What a problem to have.
Yeah, I don't know. I don't know how it works because it's supposed to be print on demand, which was weird. But I guess occasionally they have some algorithm that I think makes them determine how many to do it. They must do it in batches, and maybe they got more demand than they thought. Who knows? But anyway, it's fixed. It's back, and there's a second way to buy it too. The Bitcoin Infinity store in Europe will sell it to you for sats, and I've heard they're doing very well, and might be quicker shipping. I'm not sure where the European printers are for Amazon. So anyway, did you in Australia? I've seen a few people have started to get it in Australia. Have you gotten yours or
not yet? But it's they've told me that it's now back in print, so it should be arriving shortly.
Very good. Yeah.
Yeah. So I mean, on the book. What were some of the biggest lessons you got, first of all, from actually writing the thing? Because, I mean, I haven't written a book per se, but I've done a thesis back in my bachelor's degree, and I did Coin Time Economics, which was 120 pages. It's a monster of a project.
It's a lot of work. Yeah, this one's 384 pages with a lot of charts and graphs and footnotes. And, you can't just do it casually because it's going to last forever. And so you want to make sure it's accurate and right, and you got to have a lot of checking. And I had a great editor. You learn things. I mean, as I was surprised, actually, as I dug into the history of some things that I kind of generally knew, but I didn't completely know. I did learn quite a bit, actually, about the monetary history of the United States. One insight that popped up late in the research was I was messing around looking at Metcalfe's law and looking at networking businesses. And so I did I said, okay, let's see, what has the return been on Amazon since they went public? Well, it turns out it's 218,000%. And the return on Google since it went public is 9,000%, and Facebook is similar. And that just kind of I kind of knew that these networked businesses had done extremely well, but I didn't realize they'd done that well. And that they all went public in the early 2000s. And so here we are in under 20 years. You've got businesses based on a network, based on the network effect, that have returned thousands of times your money. And I think it's very rare historically for that kind of thing to happen. I mean, there have been other, real long shot things that return 1,000 times your money, gold miners or biotech companies, whatever. But I mean, like I went and checked, General Motors is up like 300 or 400% from the time it went public in 1916. Well, guess what? That was 100 years ago. So, I mean, but so here we are in 20 years, these network businesses have returned that kind of number. And it kind of was a shocker to me. I thought, wow, this is different. This is not the investing model I was taught. And of course, as Bitcoin is a network, right? And when it's getting affected by, and so it's kind of like, wow, that's really powerful, and something that traditional investors taught, price earnings ratios and Graham and Dodd and Sharpe ratios, and you've got to kind of look at these network businesses differently. And I even talk about that in the book because I didn't look at them differently. I made the mistake I looked at Amazon and Google when they were small and growing, but I couldn't get there because the price was too high. I thought, well, they're not making enough money, and the prices are really, really high. And I didn't understand how the value was accruing in an early stage network. And so, and I missed them as a result. I mean, I didn't buy Google. I didn't buy Facebook. I didn't buy Amazon. I should have, but I didn't as an investor. Michael Saylor did. And as a result, I missed that, but I'm not going to do it again because Bitcoin's the same thing. And, I fully expect that we're going to see the same kind of lights out return in Bitcoin. We've already seen it in 15 years, but I think it's going to continue, for quite some time because as from the Jesse Meyer chart, what are we at 2% global adoption of assets or in Bitcoin? 0.2% global adoption of Bitcoin. So we've got a long way to go here. And to people who kind of look at it and go, gosh, 100,000 is too expensive, I can't buy it. I'm like, no, we're still really early.
I've been describing it as, and we'll talk about this in a second, because I've got one more question on the book, but this idea of like Bitcoin is now, it was the biggest fish in its pond, but now it's a small fish in the biggest pond, which is all the money that's out there. But before we get there, because I know in the book you've got a lot of like personal stories. What was your favorite like insight? Because that's what I think is so good about these kind of books. You give these personal anecdotes, and that helps the normal person who's not familiar with the monetary system and finance. It helps them go, oh, I kind of get that. So what was your favorite story that you embedded?
Well, it's the one I opened the book with, and I don't want to spoil it. I want people to read the book. But there was a conference where I challenged Tim Geithner, and it was it took guts to do it, and I was really kind of the turd in the punch bowl at that event. But I felt like somebody had to do it. And I think you might actually be able to see it. If you go on Amazon and you look at the book preview, I think it might be in there. Somebody told me it is. I'm not sure. But yeah, look, the reason I wrote it the way I wrote it, James, was I wanted, people don't read textbooks. Do you know what I mean? They just don't. They're not going to, and don't get me wrong. I mean, the Bitcoin Standard is an earth-shattering book. Lynn's Broken Money is an earth-shattering book. They're fabulous treatises on money and Austrian economics and so forth. But sadly, I've given them out to many friends and they don't get read. The people bog down. People like stories, right? People watch movies. They read. They just like stories. And so I tried to kind of tell it. I kind of tell. This is a monetary tale, but it's told as the story of Larry. And with all the ups and downs and everything else. And I mean, even if you go back to the Bible, the Bible's got a lot of messages in it, but the way it does it, it tells them with stories, right? So I've tried to make it engaging and relatable, and give them a sense of who I was, and show some of the mistakes I made, and some of the things that are positive, and so that they can get a sense that this isn't just that this is one guy's view of how this evolved, and therefore it might be a little more interesting to read. I mean, that's the hope anyway, because we didn't lead off with this, but I like to lead off these talks about the book with what's your goal? My goal with this book is to orange pill the entire world and save the working people of the world who have been ravaged by inflation. And so I want to help everybody who feels like, the inflation thing has hurt them in their lives. I want them to understand how they can fight back, and I want them to understand how they can protect themselves. And then by extension, I think if we all do that, we're going to change this monetary system. And I think the best part of that is we're going to eliminate the wars, because the governments aren't going to have the money to pay for them. And I think if we can do that, that's just a beautiful thing. I mean, we've really accomplished something if we can do that. And so my goal, it's funny, we talk about Bitcoin, I talk about Bitcoin with a lot of people, and we're like, it's really cool. Everybody in Bitcoin is working for everybody else in Bitcoin. Michael Saylor's working for me. Jeff Booth is working for me. You're working for me. Anyone who's supporting Bitcoin is working for me. And I felt like, well, shoot, I got to pick up an oar and kind of pull on the Bitcoin oar and work for everybody else. And so my contribution is I've been at this monetary thing for a long time. I was gold before Bitcoin. And so I kind of knew where some of the bones were buried. And, I get young guys like you, and, I talk about some of the stuff that happened in the past. And, you guys were in grade school, you know what I mean? And I was there living it. And so I thought, well, I got to keep these stories alive so that people kind of get a sense of the history and how we got here. You know what I mean? And so that's probably what it was kind of my value added, I think, in writing the book.
And that's one of the interesting things about macro monetary systems is they're big, but they move so slowly and they take decades to play out. So I guess the timing of writing this book is interesting because I think a lot of people in the Bitcoin space, we're looking at the world and it probably has always felt like it's almost here, but it's never quite here. What's your take on like the proximity of, I guess, the problem that you illustrate?
Ask that, and I've been wrong a lot. I mean, in 2008, I thought that was the big one. I thought we were going right to hyperinflation in 2008 when they printed all that money. And as it turns out, I was totally wrong. So, and I explained that in the book and why I was wrong. And they started paying interest on excess reserves, and I confess my sins there. But, in terms of where we are right now, a lot of people want to know the answers, and I don't really know, but I'll speculate. It seems to me that we are in a fourth turning. These tend to last 20 to 30 years. I think this one started in '08. Fourth turnings, is, for those who don't know, there are times when all the rules of society change because something's broken. And the last one before this was World War II. Before that was in America was the Civil War. Before that was the American Revolution. They come about every 80 years. So we're now about 80 years on from the end of World War II, and here we are in this fourth turning. So based on that, I feel like this is going to get resolved in the late 2020s or early 2030s. But the other thing I look at that kind of gives me a sense it's coming right now is just the speed with which things are happening and the magnitude that's happening. So, we already had a big print. We had a big print in '08, right? And then we had a bigger print in 2020. And I think we're going to have an even bigger print the next time. And, the '08 one was, we created, I don't know, $3 trillion worth of money, the Fed did. And, it took 3 or 4 years to do that. In the COVID example, we created, $5 trillion worth of money, and it took 18 months. So it was, more money in less time. And the events are getting closer and closer together. So I've used the analogy, it's like childbirth. The contractions are getting quicker and they're getting stronger. And so pretty soon we're going to have a child. So, it feels to me like it's coming. I mean, there's some good charts in the book. One of the charts, my favorite charts, is the chart of the U.S. federal government interest expense. And just the way it's kind of going parabolic. And this is what's leading to the debt doom loop. And, people say, well, how can you be so certain about this, Larry? And I said, well, it's just math. If anyone could sit down with a calculator and do compounding and realize that if you compound something at a pretty high rate over a long period of time, eventually the curve kind of goes asymptotic. It goes straight up. And so, we're in a stage now where, there's another good chart in the book. We added $11 trillion worth of debt in 11 years. I mean, it took 200 and some odd years of the history of the country to add it in before that. So, we're now adding, we're having deficits of 1.8 trillion, but because we don't account for it honestly, we're adding between 2 and 3 trillion of debt to every year. And that amount's growing because the deficits are growing, because it has to grow, because mathematically, this is Lynn's "nothing stops this train," thesis, that you grow the GDP slower than you grow the outlying debt, and eventually something's got to give. Either the debt becomes unpayable and collapses, or you've got to inflate the hell out of the GDP, which arguably can lead to super high inflation. In a worst case, it leads to hyperinflation. I'm not calling for that, but I'm saying it's a tail possibility. But these are all scary and bad things. But I want to emphasize to people who are listening and aren't familiar with the book or me that there's a lot of good news in this book because Bitcoin and technology and the internet and everything that's going on, all these things are fixing the world. And the world's going to get fixed because people aren't stupid and people move towards better solutions all the time. The reason to write the book was I want the world to get fixed sooner rather than later because I'm not going to live forever. So, and I want to see my kids living in a fixed world. And but to your answer of timing, I think this is going to get resolved in the next 5 to, at worst case, 15 years, probably average maybe 10 years, maybe by the early 2030s. We've got a sound money standard, just because the pain from the broken, unsound money standard will become so large that people will be just demanding it. They'll just say, "Save us," and the answer will be to go to sound money.
So one of the interesting dynamics, I know that Jeff Booth talks about this, is that people will constantly vote for more inflation. They don't know that that's what they're doing, but like the default position is most people say, "I'm having a hard time. I'm going to vote myself some free shit," right? That's generally how
that's
people
right.
go.
Some will. Some will.
It's a really well. This is what I think is really interesting because we've obviously seen a change in leadership in the US, and they've basically come out with a scalpel in the first 2-3 weeks and gone pretty to town. So, what's the probability, and what's your kind of framing around what you're seeing in the US at the moment? Because the DOGE department's really, you could argue it's fiscally responsible. They're trimming fat here and there.
Yeah,
and
no, absolutely. Yeah.
How far can they go with this? What's
Yeah,
your kind of
no,
general
that's a
view?
super intelligent question, and I think about it a lot. I mean, I used to say the one thing that could, ruin my monetary debasement thesis was a responsible federal government. And hey, look, we've got some guys who are trying to conduct a responsible federal government, and they found some very irresponsible stuff, and they're eliminating it. So, look, I applaud everything they're doing. It's all good stuff. It will help the country. It will help the world. We should be fiscally responsible. We shouldn't trash the currency. Let me say, as a counter to that, however, that and there's a halo right now. I mean, we've got a new president who's doing some really great stuff. As a counter to that, though, let me say that it's pretty damn far gone and it's pretty damn broken, and there's only so much that they can do. Lynn had a good podcast recently where she said, "Look, they can slow the train down, but it's going to be hard to stop it." And let me explain why. 80% of the U.S. federal budget is in Medicare, Medicaid, defense, insurance, and interest. And so, if 80% of the money is in those buckets, and Medicare and Medicaid are kind of third rails. I mean, you lose all the boomer votes if you touch either of those. Defense is pretty locked in, although we could probably cut some defense spending for sure, particularly if they're able to solve some of the wars and get some peace in the Ukraine. But the interest charges are just going up because interest rates are going up because people know that they're debasing the currency. So, DOGE. I mean, the balance of the 20%, even if DOGE takes a huge hammer to it, it's like total spending is about 6.75 trillion. So if DOGE goes and takes a hammer to that piece, they're going to basically cut. It's 1.3. And the deficit's running 1.8. And by the way, they can't cut that 1.3 by even 50%. So they've got a very, very tricky problem here to solve. And I don't think they're going to be able to solve it. And I think more importantly, the debt burden is going to lead them to have to debase the currency and do what I call, with the title of the book, the big print. They're just going to have to do it. I mean, another one is coming. And when they do, that will be inflationary. I mean, the one positive thing about what Trump's trying to do, and the one, and Luke Roman talks about this, is, arguably we could try and have an inflationary growing economy, where we say, look, we're gonna let inflation run hot. We know it, but everyone's going to be fully employed. We're going to invest in the right stuff, and we're going to earn our way out of it through productivity. And that's kind of what we did after World War II. I mean, in World War II, we had the same problem, all the debt from the war, was overhanging it. And so they did yield curve control. They suppressed the yields. Bondholders got killed. And they did a lot of programs. Ultimately, they did the Interstate Highway Program and other things. And they spent money on infrastructure and to grow the economy. And all those GIs came back and they got married and they had kids and they created the baby boom and the auto industry boomed and, the highway system grew. And so they grew their way out of it. And there's an argument that could happen here with AI and a lot of the other good things that are happening. And I hope it does. I mean, I hope the economy thrives. We don't have to have some big, collapse at all. And I hope we can do a transition to a sound money system without there being a ton of pain. I mean, I think there will be pain for bondholders. That's a fact. I mean, the bonds are just very badly mismarked. I mean, there's just not enough money in the system to pay the bonds back in real terms. So there's got to be more money injected into the system, which will then create inflation, which means that bondholders' purchasing power will be debased. That's going to happen. That's just a given. But the rest, if everyone else stays employed and we grow the economy and maybe inflation's higher than we would like, but we transition to a sound money system, maybe there's a positive way to come out of all this. I think the important point though is that we do transition to a sound money system, that we don't continue to let the deficits run wild, and that we don't continue to print money to solve problems, because the book goes into great detail about how the Keynesian model is wrong and the Keynesian model is broken. Printing money does not help anybody. It makes things worse. And it's what we've been doing for the past, couple hundred years. It's gotten really acute more recently. And, I mean, to me, it's just tragic. You've got everyday people who work their entire lives. They've built up a pile of savings, maybe modest, and in 2 years with COVID, the government prints 40% of the money supply, and takes away years and years of their labor and their savings in terms of purchasing power because everything gets more expensive. I mean, it's just tragic. It's just wrong. And so, what the government has to come to realize is there's no free lunch, and that's what DOGE is trying to do. But they've given Trump a really bad hand. I mean, the Democrats just ran this thing into the sink, the toilet, and so I hope they're able to do it, and I'm rooting for them. But I'm telling you, it's pretty badly broken, and so therefore, I think it's gonna be tough to pull it off. I mean, we're going in the right direction, but it's going to be tough.
Yeah, one of the frameworks that I use, and I often say, like, there's 5 prices that I pay attention to. There's the US dollar, there's treasury yields, the oil price. That's really all about your liquidity environment. And then Bitcoin and gold are the fire alarms. They're like the 5 prices that I pay attention to.
That's my dashboard. That's exactly what I look at.
That tells you a story of what's going on in the US, the global reserve, and all the other assets. And I use this framework of, like, what's the gravity and what's the managed outcome? Because I think they're 2 components, right? So my base case is that why on earth would you lend money to the government? We know they're broke, so therefore yields the gravity is higher, but that breaks stuff. The dollar, everyone has debt in dollars, so the dollar wants to go higher, dollar milkshake theory, but the managed outcome is ultimately what I think you're getting to with the big print. Those things can't be allowed to happen because that causes even more ruckus.
Right. Yeah. It's a doom loop, and it breaks the system. Yeah, you're absolutely right. It does cause more ruckus, and so yeah. I mean, the long and the short of it is they'll probably have to go to yield curve control. They'll probably have to print more money, and that will be inflationary. And I mean, it's, to me, there's a part of the book where I talk about how it's very obvious that we are in a sovereign debt crisis, and the reason for that, the way you can tell that more than anything else, is you look at the 2 charts that show the price of gold compared to U.S. bonds in U.S. bond terms, and the price of Bitcoin in U.S. bond terms since 2020. And it's stunning. It's like, the alarm bells, the canaries are dying, but the alarm bells said a different way. The alarm bells are going off. I mean, Bitcoin's up 2,000% since COVID started, and, in bond terms. And gold is up 200%, since COVID started in bond terms. And so what that tells you, and that's going to continue, and what that tells you is that bonds are in a lot of trouble. So, and the reason, and what bonds being in a lot of trouble tells you the world is slowly but surely figuring out that the U.S. is bankrupt. Sorry about that. My dog is all fired up. I don't know what's going on.
It's dinner time. Yeah. No, I think, and gold, right? So the thing that really caught my attention this week has been the gold price. It's just absolutely ripping. What's your thoughts on how gold is performing, why it's doing what it's doing? There's there's talk about the COMEX, and the London vaults can't actually get they don't have the bars, and, like, are you paying attention to any of those components?
Oh, yeah.
What do you think is driving
I follow
this
Bob Coleman. I follow all the guys. The gold bugs are, look, and I've been around this long enough to know that I'm still a little bit skeptical that this isn't the big one in terms of, so one of the things that we're talking about here is just the issue of, there have been a lot more paper claims for gold issued than there actually are gold ounces. Okay, that's the issue, and this is talked about in the book, and there's an organization called GATA, which is the Gold Antitrust Action Committee. It was run by some wonderful gentlemen who've documented all this stuff that shows this. And so what's happening is we're seeing a lot of people who have a paper claim on gold saying, I'm not so sure I'm comfortable holding this paper. Why don't you just give me the ounces? And the depositories that have the gold are kind of saying, well, yeah, we'll get you those ounces, but we don't really have them right now, and there's going to be a delay. And it was pretty hilarious, some of the stuff that was coming out of London. They were saying, well, there are lorries blocking the door and the gold's heavy, and they had these crazy excuses. I was like, really? You guys, can't you come up with something better than that?
The gold's heavy. I mean, it's true, but, like, you'd think you'd know.
Yeah, it is heavy, and there are lorries outside, but, come on. This is your job. When somebody buys gold from you and says, I want it, you're supposed to be able to deliver it within, 10 days or something, and they're now saying it's 8 weeks. So, arguably, this is kind of, it's like a run on the bank, right? If suddenly, banks in theory have money, and we all know what a bank run looks like. We've all seen It's a Wonderful Life. And, banks in theory have money in the vault, but if everyone came and asked for their money at the same time, they may not have enough money right at that time. And the same is kind of true in the gold market. And some of that's going on right now. And arguably, maybe it's going to be a serious problem. And one of these exchanges could fail. And if, say, well, sorry, we can't do it anymore. We're going to cash you out for dollars, not gold. And if that happens, boy, Katie bar the door. I mean, there's going to be, gold's going to go to 5,000 or 10,000 an ounce quickly. And many of us have been saying this for years. And this could be the one where that happens. But I'm not prepared to predict that. I mean, I think my guess is they'll find the gold somewhere. They'll tamp it down. They'll get the deliveries done, and there won't be a default on the LBMA. But that, that's my, if history is any guide, that's my guess. But on the other hand, maybe that's not what happens. Maybe there really is a shortage of gold, and maybe everybody who's holds a claim is saying, I want a chair in this game of musical chairs, and the music's now stopped, and there aren't enough chairs to go around. I think that's certainly a possibility. And I know some guys who are really smart who think that is definitely what's going to happen. And I'd say I'd say that's a 30% shot of happening. But not zero, but not 70. We'll just have to see. I mean, it does. The other thing it does is it brings gold up into the forefront. I mean, when you start seeing headlines like this, a lot of other people. I mean, investors are tend to act and behave in herds. It's human nature. You follow crowds, and suddenly, well, gosh, big rich guys are buying gold, and there's not enough gold to go around, and the price of gold's going up quickly. Maybe I should be buying some gold. I mean, frankly, some of the little guys got this a while ago. I don't know if you saw, there were some good articles in the U.S. 6 months ago where Costco was selling out of gold bars on a continual basis. And Costco is just a very average retailer, but they decided to stock gold bars, and they were saying, whenever we get any in, they sell out quickly. And so, so there are a lot of people in the United States and around the world, I'm sure there are in Australia and Canada and a lot of other places that produce gold, who understand that gold is analog sound money, it can't be printed, and see that the government's out of control and is likely to print a lot of money. And it's a very good choice for people who are looking for something that's not volatile, that can't be debased. And gold's probably the best choice in that category. Now, it's not going to go up as fast as Bitcoin, but Bitcoin's a lot more volatile too. So, you make your trade-offs.
And it's one of those things. So something I've been talking about recently is when gold, I think it's about $300. If gold moves up $300, that's an entire Bitcoin market cap. That's like a $2 trillion move. And that's the thing, like the scale of the move is just so much bigger.
Well, and it's, governments buy it. I mean, and governments buy Bitcoin too, but not as many and not in the same kind of size, and big billionaire type guys buy it. I mean, and the billionaires have kind of come to Bitcoin, but not entirely. And it's interesting, we talk about gold flipping Bitcoin. So the entire, gold market cap is about $18 trillion. Probably a little, I have to run the numbers now at 2,900.
It's getting up to 19 now, I think.
Yeah, it's probably 19, right. But keep in mind that not all of that, James, is available for you and me to buy. So like 20% of that's sitting in antiquities and museums. So, the British Museum is not going to go melt down the pharaoh's head, to get the gold, right? And then, maybe 20% of that's in central banks, and most central banks are buying, not selling. And, I think out of that 19 million, let's say, 25, 30% of it is actually in what you and I could invest in, which I would call bars and coins. So bullion. So you can buy a bar, you can buy coins. Okay. And then, the balance, of all those numbers is probably 30 or 40%. That's around women's necks, in India and the rest of the world. And, by the way, if gold goes to $100,000 an ounce, I mean, my wife's going to melt down her jewelry, We're going to use it to buy Bitcoin. But, so the available gold market, let's call it 4 to 5 trillion. So the available Bitcoin market, let's call it 2 trillion. So everyone says, well, gold, Bitcoin will flip gold when it gets to 19 trillion in total market value. Yeah, kind of. But it'll actually kind of flip gold even earlier. Because if the investment gold is 5 trillion and the investment Bitcoin is 2 trillion, when Bitcoin doubles from here, when Bitcoin's at 250, the Bitcoin market's going to be similar to the investment gold market, so in size. So I just thought that's an interesting fact.
And we've seen the Bitcoin ETFs already have as much, if not more, AUM. I think they're both around 120.
Oh, much more. Yeah, they crush the gold. Yeah. Well, and that makes sense because those gold ETFs. I mean, you're playing with fire. That's paper gold, right? I mean, I don't think those ETFs have. If you read the prospectuses, they have the right to buy gold futures contracts and well, guess what? The person who sold it to him could be Lehman Brothers. And so when gold goes to 10,000 an ounce overnight, they could say to the Lehman Brothers guy, hey, give me the gold you sold me. And the guy says, sorry, I'm bankrupt. I don't have it. So, the ETFs are paper gold. And I think a lot of the smart wealth in the world, the billionaires who buy gold, and I know a few, they don't buy the ETFs. They buy the gold and they put it in a vault in London or more often in Switzerland. And they have numbered bars that they can point to that those are mine and they can't be rehypothecated. They can't be loaned against. Nobody else can claim them. So, they're smart enough to realize that possession is 9/10 of the law. And this really actually tracks very much with Bitcoin, where, we all say if you don't have your keys, you don't own your Bitcoin. I mean, yeah, you can have a Bitcoin proxy. You can own the price moves in Bitcoin by having IBIT, the BlackRock product, or FBTC, the Fidelity product, but you don't really own that Bitcoin. Fidelity's holding it for you, and IBIT is holding it for you. And if the government decides to confiscate it, they're going to turn it in and give you cash. Whereas if the government says to me, turn in your Bitcoin, my response might be somewhat different.
Yeah. Okay, it's funny because I checked my spreadsheet that I bought myself a physical ounce of gold back in 2021.
Good for you.
Yeah, and it was one of those things I wanted to just go through the loops of actually physically going down the coin shop, pick it up, and just go through it. And I checked it. Yeah, It is. No, you can see why human beings have gravitated to it, but it's up 85% from the price when I bought it. And I was like, again, in the world of Bitcoin, people are like, 85%, that's peanuts. But this is a massive move in, an asset that's 10 times bigger than Bitcoin is. It's actually quite incredible to see that kind of return over a relatively short period of time.
It tells you how much debasement there's been. And imagine, I know people and families that bought it at $35 and they still own all their ounces. You know what I mean? And guess what? They're really glad they do.
Yeah. And my base case is, and this is actually a kind of a topic of where the world is going. So my base case, if you divide a stock or anything by the gold price, some people divide it by M2, some people divide it by whatever it is. But if you want to track your real debasement, gold is kind of my benchmark. If you're not outperforming gold, you're probably not going to outcompete the inflation and the debasement. So when you actually do that exercise, you find that there's very, very few assets that are actually outrunning that, which is quite remarkable over any meaningful period of time. If you divide the S&P 500 by gold, 2001 was the peak, and it's been basically down only ever since. What do you think about that kind of general framework of just, can companies even outrun this debasement? What does that world look like, where it's kind of hard to beat your sound money assets once they get into a structural bull?
Yeah, well, the book talks a little bit about this. There are times when stocks are a better thing to hold than gold. When the money isn't being debased rapidly and the credit cycle is healthy and companies are growing, Buffett's right. The gold doesn't pay any dividends. It doesn't do anything. It just sits there. And, the beauty of it, its beauty and its value, the fact that it's rare and pure and so forth, that's a positive, but it's a negative, in terms of, producing something. There's no production from an existing ounce of gold. It's just wealth. Companies, on a risk-adjusted basis, if the dividends are untaxed, the 50-year, and the book has some good charts on this where it shows the 50-year return on gold, the 50-year return on stocks. And it's interesting, they tend to be pretty close together if you don't count dividends. If you do count dividends, the stocks do a little bit better, but the dividends have to be untaxed. They'll do better even if they're not untaxed, but they do a lot better if they're untaxed. If you have to pay a tax on the dividend and put it back in the index, then you do just marginally better. But if you also look at the chart, what you'll see is there are times when stocks are a better place to be, and then there are other times when gold's a much better place to be. And since 2000, gold's actually crushed stocks. But in the 80s and 90s, gold was at 800 and it went down to 200. And stocks were at a low level, and they performed very well during those decades. So there are times, there's a time and a season for each of these two assets, and then within the stock category, there's the average stock, which is just the general thing, but within that there are exceptions to the rule, that just really add value. There are growth stocks and new technology stocks that absolutely crush the returns on gold. If you bought NVIDIA or if you bought, even the Mag 7. Now, I happen to think all those are very overvalued and headed for trouble. And I would not be buying those right now. And in fact, I'm tempted to short them. I'm not going to. But the point is that there are times and places and stocks particularly that really can provide a lot of alpha over and above sound money. But I think you're right in general to measure your returns against the baseline of, over a long term. I mean, so let's talk about inflation for a minute. Inflation is just, it's the money supply claims against the goods and services that are produced. And the government cooks the numbers. We all know that. Long term, historically, growth in M2 from 71 to present, which is 50 plus year time, 54-year time frame, right? 53-year time frame. M2 has grown at about 7% a year. Okay, and so that's our long-term average rate of inflation is about 7% a year. They can tell us it's 2 or 3. They can tell us it's higher than that. Whatever. To me, that's real inflation. You got to beat 7%. And interestingly, that same time frame, the long-term return on gold is about 8% a year. So gold just barely did its job of doing a little better than the underlying monetary inflation. It held its purchasing power. Didn't grow it, but held it, okay? So to me, that's kind of the base bogey that you want to try and beat. And obviously, if you can get any return over and above that, well, then that's a real alpha that gives you, that proves that you're selecting something that the world wants more of. Of course, the other interesting thing is in the same time frame, and I think this is another stunning thing when I did the book and I laid it all out was just, and there's some really good charts that I grabbed out of there. It was just how stunning the performance, the outperformance of Bitcoin has been. I mean, it's just, you just can't ignore that. I mean, you look at the traditional finance types and they're having a hard time getting their head around it. And I get that, but come on, guys, you're supposed to be looking at returns, and this thing is just crushing all the competitors. And okay, fine. In the early days, you say, well, it's risky, but we're now 16 years in. I mean, this is not a new asset class. 16 years is a track record, and it's on every time frame, it's crushing the alternative. So I find myself hard pressed to think what's going to make that change. Now, it may not crush them by as much, as Saylor and others point out. Over time as it gets adopted, I mean, the early adopters really just had outstanding and just insane returns, and they're going to come down to a more normal level as we get more normalized. It gets more widespread, but still, I go back to Jesse's chart where 0.2% of global assets. He says that Jesse Myers, who I'm referring to, him on Twitter, the 900 trillion of global investment assets, assuming you include stocks, bonds, cash, and put real estate in there, because a lot of people view real estate as the biggest investment. There's 2 trillion of Bitcoin market cap. So that means that 0.2% of all investable assets are in Bitcoin. That's a pretty small number. That means Bitcoin could go up by 10x. The $100,000 coin that you and I own today could go to $1 million, 10x approved. And if everything else stayed the same, Bitcoin would now be 2% of the 900 trillion of investable assets. So, okay, the best form of money ever invented, can't be diluted, quick to verify, easy to transfer, easy to store. Gosh, I mean, that seems to me like it could be more than 2% of total assets. You know what I mean? So,
I've told this story before where, like, if you take $5,000 worth of silver coins, it's a hefty, large object. It's heavy. It's a pain in the ass.
Oh, absolutely. Silver's a real pain in the ass. It's really heavy.
Yeah, you take $5,000 worth of gold and you've got a coin and a half, and then Bitcoin, it's exponentially better, right? Suddenly your space requirement, you can zip it around the internet. That was actually one of the reasons why I went and bought myself physical metals, because you can now see it exponentially better in terms of its value storage potential. You can zip it in and out of a safe without even looking at it. Like, it's incredible.
Well, that's right. And yeah, I mean, and gold, I mean, literally wars have been fought over gold. I mean, people have invaded other countries, and the first thing they do is they go raid the gold and steal it. And, this is Jason Lowery's book and his thesis that, 12 words and you've got wealth that a sovereign army can't take away from you. You know what I mean? It's the information is the value, and the information is in having the private key. And so, yeah, it's that fact alone, in my opinion, is going to totally restructure and change the world in a really positive way. But it takes a lot of thought and a lot of understanding to get your head around that. It's taken me a long time to get my head around it, but I really believe that this thing is going to make life so much better for everybody. And that's why, therefore the book, therefore the proselytizing, everything else. I'm just trying to, I feel like I've seen this thing that I know is going to be a big benefit to society, and it feels incumbent upon me to, put my shoulder to the wheel and try and turn it a little bit and help people to see it, because it's really important.
So a pattern that I've seen playing out across multiple markets, and when you see things that are like, oh, that's interesting, and it happens in big spaces,
Yeah.
I certainly take notice. We've had the Magnificent Seven, right? This is like the there is no second best, right? That's kind of the underlying theme here. We've seen the Magnificent Seven and everything else gets left behind. We've seen Bitcoin dominance in the crypto world, for whatever that's worth, just exploding higher. So there's this like separation. And what I wanted to ask you about is the gold-silver ratio, because silver appears to be, and I see a lot of like commentary, and I believe silver will probably still go up because I know the dollar is going to do poorly against it, but the gold-silver ratio has now found its home up here at like 85, 90.
I know, it's something.
And there's a lot of people who want it to go back down to 30 and go back down to 20. And I just look and I go, that feels like the demonetization of silver in a chart.
It is.
It looks like crypto dominance in a chart. We're at 60% for a reason, because the market's simply not buying the alternatives. What are your thoughts on this, like, concentration into leaders?
I think that's absolutely right, James. I mean, I think that silver has been demonetized, and the stock to flow on silver is much lower. I mean, we all know that money holds its value as a result of having a low stock to flow, and that's the advantage that Bitcoin has over gold. That it has half the stock to flow of gold, and that's getting cut in half every 4 years with the halving events. And the silver stock to flow, depending upon what you want to consider to be the stock, and there's a lot of debate about the size of the stock, it's a lot smaller than gold. It's a lot smaller, and therefore, and silver is much more plentiful. I mean, there's just, in the Earth's crust, it's about a 16-to-1 ratio. But it gets used up, and it's a small market. And so I wouldn't say, here's what I would say, and this is the point Safe makes in his book, his brilliant book. I would say that silver is not going away. It's an industrial metal with a lot of uses, and it's a small market. And small markets are subject to very, very big moves when the supply and demand changes in a meaningful way. I mean, we got plenty of gold in the world. We got 210,000 tons of it. So if somebody really wants some gold, they can find it and buy it at a price. Silver, we mine it kind of hand to mouth. And if suddenly we had a lot more demand for silver and we didn't increase the mining capacity, and or the investment demand went up a lot, and we're mining like $350 billion worth of gold a year. We're mining like $8 billion worth of investable silver a year. That's not a very big number. And so, what would happen is, and this is why gold and silver people call silver gold on steroids. When silver gets into a shortage and when the market gets tight, it can go bananas. So I actually could see, silver price now of 30. It could go to 100, 150, 200. It could really shoot up in big time if we kind of developed a shortage, like we did with the Hunt brothers or like they did in 2011. But what happens in that, and this is the difference, is that, capacity can be added. Silver mines can be opened up. It takes time, but and there's a fairly good sized stock of silverware and excess silver sitting around. Go to any coin dealer in the country, and you'll find silver tea sets that some poor older couple brought in and sold to the dealer, and the dealer's trying to resell them as a set because there's a lot of craftsmanship there. But as a practical matter, worst case, he's going to melt them down and sell them to a refiner. Silver could be subject to a very, very high and rapid price spike, which I own a lot of silver, which frankly, probably if that were to occur, I might sell into. And I would recommend other people to do the same, because I don't think that higher price will sustain itself because it doesn't have a monetary component to it,
This is a really interesting topic, because a piece that I released recently, I called it the law of large numbers, because the idea is that the market always wants to mean revert back to where the real demand profile is. And within that context, I was looking at Bitcoin, and we've been chopping around up here at this $100,000 level. And in my view, the 8 months of consolidation we had last year, where we just kind of chopped around that $1 to $1.2 trillion mark, that was the precursor to this move to 100. The market's now digesting it. But it's going to, like, to go up another 50%, right? Get to 150, which I think a lot of people are like, oh, that's chump change. It's like, that's still $1 trillion of
it's a
market
lot
cap.
of money. Yeah.
And you need a lot of capital to come in, right? It's not going to be $1 trillion. It's probably going to, a couple of $100 billion of real capital inflows.
Yeah.
Exactly. But the concept is that you need this consistent capital flow to keep markets there. So you're right, silver probably can go on a run, but is there going to be that consistent demand to keep it up there? And that's what I find so interesting about this Bitcoin cycle. It is keeping it up there, right? And even if we sell off from here, it doesn't really matter because we're clearly showing there's a huge amount of demand, even at 90,000 plus. And here's a fun fact for you. About 50% of all the money that's been put into Bitcoin, and we measure this on chain when all the coins have moved, 50% of the dollar value is above 90K. Of all the money that's ever been invested in Bitcoin,
Isn't that interesting? That is an
is above 90K.
Fact. Wow.
Yes. Now that's not 50% of the supply, because that supply is priced at 100K, whereas there's a lot of supply with the cost
a smaller
base of
number
10K.
of coins, but the dollar amount was over.
Correct.
Yeah. Wow.
Which that alone shows you that is it's A, a lot of people who are going to be sensitive if we sell off, but B, that's a lot of demand. And to me, that's a fascinating stat.
Yeah, that is a fascinating statistic. And I think your point is extremely well taken. I mean, I actually like this kind of price behavior much, much better than the crash and burn. In fact, so to me, we were in the 58 club, 58,000 club for a long time. And then we moved up to 100. So we got a 42,000. Now we're forming a flag between 90 and 100 and something. And I think the next one takes us to 140. And to me, this is just a natural progression and growth. When I see, let's say we do form the next flag at 150, and then let's say something happens and FOMO really kicks in, and we go to from 150 to 275 really quick. My view is that will be setting up for the next 30 to 40 to 50% drawdown, right? Because it'll get too far out over its skis, and people won't really, and people use leverage to buy it, and you get all the crazy stuff going on. I mean, I've seen these. I was around in 2017 when everyone was going nuts over $15,000, $16,000, $17,000 coins and getting levered to do it, and then of course it peaked and came back down to 10, then it went back down to 4. And so that pattern will continue. I don't know how you feel about this, but I don't think the drawdowns are going to be as large as they are in the past. I think we've got a broader base of people involved now. And so I don't see any 90% or even 80% draws, probably not 70%. But, my model in my head is we could easily see Bitcoin move to 250 in this cycle, and then it could easily correct back down to 145 or or 100 or 120 or something. I mean, that to me seems completely within the realm of possibility and likelihood.
This is very much that's more or less how I'm thinking about it at the moment. So for some context, if we go to, I've got this thing I call my topping cloud. It's basically where a lot of on-chain metrics are going to say the average hodler is in so much profit, unrealized, that they historically put tops in, right? So that 120 to 150 goes from like half a standard deviation to 2 standard deviations overblown. That doesn't mean we can't go above 150. But it means that the probability of us staying up there is like less than 4 or 5%. So I do agree with that. And I've been using this saying that the bull market authors the bear that follows. If you wake up tomorrow and Bitcoin's 500K, now I can easily construct for you a case where we pull back 75, 80%.
Oh, absolutely. Yeah, no, I mean, and I'm the first to say that, if we go there, would I lighten up a little bit? Sure. Yeah, sure I would. Just because, you got to live your life, and so on and so forth. And so but when I say lighten up a little bit, I'm talking percentages, like single-digit percentages. But just letting a little bit go because, hey, let's share it with some other people, and I could use that fiat to do some other things. So yeah.
And that's something I try to get people to understand is like what top, so to speak, matters for you. Because a retiree's top is very different to a guy who's leverage trading on the next hourly candle.
Well, right? That's right.
The top that matters depends for what your time frame and your goals and your needs are.
Well, that's right. That's exactly right. And if you're young, you might not want to lighten up at all, and you just keep DCAing all the way through it, and you buy it at 250, and then as it comes back down to 125, you buy it all the way down. Just as you have cash flow, you buy it. I mean, I think And my view is we will see $1 million, and I don't know what the time frame is, and then my view is after that we will see $10 million. I mean, so I think somebody said something I thought was an interesting comment, and I kind of agree with this, which is that the sad thing is whatever Bitcoin you sell, you probably won't get back, and that may not entirely be true. If you really are good and we rip to 250 and you sell a little, but whatever you sell, you got to pay taxes on, and then where do you buy it back? I mean, how do you know what's really cheap as it comes back down? I mean, with me, I've never really sold any. But I'm not really buying any right now either. It's not like I have a lot of cash to buy stuff with, but at some point maybe I sell some gold or I sell some silver. We've gone to that 250. We've come back down to 125. I'm kind of like, gosh, this seems a little cheap. Maybe I'll reallocate some of those silver and gold proceeds over into Bitcoin.
And that's the thing, like for many hodlers, and again, it really depends on where you are, but like sometimes the answer is, I'm just not going to buy, right? That can be your equivalent to, you don't have to sell, but I don't want to buy during overheated conditions.
Yeah, I was going to say, if we're at 250, I recommend it to everybody, say you ought to own some of it. But honestly, when we're at 250, I'm going to be a little more quiet about that and try to point out to people that if they do want to buy it there, they should go slow and they should set up a DCA program because there's a chance. I mean, a plot buy at 250 may not be a smart thing.
Yes. So kind of building on this, and probably one of the biggest themes of this year has been this whole idea of sovereigns starting to step into the market.
Yeah.
I find this really interesting, and I wrote a piece yesterday about the mining industry and how, like, if you think about the reasons why a nation state would want to censor and attack Bitcoin, you can level the exact same argument and say that's why they would also want to mine. And there's this like really interesting game theoretical component. And look, I haven't quite come to my own opinion of how I feel about like the US government stepping in and strategic Bitcoin reserves. I think it's interesting because Bitcoin and gold are at the same level now in terms of the conversation. But what's your thought on this like sovereign level buying, the game theory, and probably more importantly, is that game theory different for the US than a nation like, I don't know, like Saudi Arabia or China or Russia? I can understand the game theory there. What's your thoughts on the US as the global hegemon?
I'm very much of two minds on all of this. Okay, I mean, I'm not, and I've had people who said, hey, if you believe in the government buying Bitcoin, you're being a statist. You want to, I mean, so there's the libertarian anarcho mind that wants to see the government go away. You don't want to do anything to strengthen them, and why let them buy Bitcoin and become stronger? But the flip of that is that, our system, as broken as it is in the United States, is, in my opinion, still vastly superior to the Chinese and the Russian systems. And so, I would much rather see my country thrive, versus those two countries. And so game theory is going to kick in because every country is going to have to make a decision on where they want to store their sovereign wealth. I think in general, I think it's a good thing that governments are thinking about buying it. I mean, obviously it will make number go up and it might become a way to defease some of the debt. And it's a way of weakening their own currencies, which I think actually needs to happen. And so, I mean, as Saylor says, if the government were to sell its gold or were to start printing money to buy Bitcoin, we would more rapidly go to a Bitcoin standard. And so, and to me, okay, so let's go back to first principles. First principles, I think being on a Bitcoin standard will make the world a much better place. I think that humans, it'll be fairer, there'll be a middle class again. Everybody will be playing by the same set of rules, and the odds of there being wars will be significantly reduced. Okay, so that's the first principle. So if we get to a Bitcoin standard, the world gets better. All right, how do we get to a Bitcoin standard? We get the price of Bitcoin to go up. We get more and more people to move to Bitcoin. We get more and more people to own Bitcoin. We get everybody to support it. And in fact, it becomes a replacement for fiat currencies, for the dollar. And so, I don't think everyone in Washington, D.C., even the people who are supportive of the Lummis bill, fully understand how much, building a Bitcoin strategic reserve will threaten the dollar. I mean, that's almost like saying, we're gonna trash the dollar to move to this form of sound currency. And so I'm kind of here for it. I mean, I don't entirely like my government getting more powerful because I think I want my government to be less powerful so they can't do as many wars as they've done. But on the other hand, I'm kind of two minds on this, James. It's hard, It
is. No, it's very tricky.
I'd like to see Bitcoin succeed. There are lots of paths to get there. I'm not sure that having a strategic reserve is essential, but I'm not really sure I should oppose it. Do you know what I mean?
Yep. No, it is a very interesting thing because, like, we're in the world of politics now, and you can't trust them as far as you can throw them. And you're like, you kind of got to balance both sides. Um, One area that I think, and how I've started to frame this up, I'm of the view that Bitcoin probably doesn't replace fiat currency, but I think it does replace treasuries. So I hold this view where I think that the savings component and the medium of exchange are probably going to be split. I think the stablecoin momentum is probably pointing towards that, like a dual money standard. And this makes sense because you have a hard asset and you can borrow soft money against it. And in a way, that's that kind of progressive devaluation. And the way that I think is almost the best of both worlds is America. I don't think that America needs to buy Bitcoin as a government entity. I think what they should do is encourage their citizens. So if you kind of think about what Trump's policies are different, they are for Americans, which will eventually be good for America, where you could look at all the previous governments who were trying to act on behalf of America, full stop, without considering the people. And if you almost have the Bitcoin reserve from within, you've got the sailors of the world, you've got the Bitcoiners in America, you've got the ETFs, the Bitcoin is onshore and you make your people wealthier, that's the reserve, because then they generate productivity and they are the ones that win out.
I think that's actually very insightful, and I think that's a very good point. I really like that, and I kind of agree with that. And I think there's a part in the book where I talk about policy proposals and policy responses, and one of the things I say is that I really believe strongly that, and Trump's kind of hinted at this. I don't know if he'll do it, but that the government should basically make all forms of money free of capital gains taxes, legal tender, allowed to be used in trade, and free of capital gains taxes. So I think that, people and let the dollar, gold, silver, and Bitcoin all compete on a level playing field, right? There's no tax. So today, obviously, as you know, in the United States, if you buy gold, pay a price, it goes up in value, you sell it, you've got a capital gain. You bought an asset, which I don't think is right because gold is money. It's defined in the Constitution as being money, and therefore, what really should happen is if it goes up in value versus the dollar, well, that's a dollar problem. That's not a gold problem. You shouldn't have to pay a tax because you were holding the right kind of money. So we should have all these four kinds of money, all of which are acceptable, and none of which are taxable, and then just let the chips fall where they may. I think what you describe is right, but I think what will eventually happen is, the Lightning Network will get better, or some other layer 2 solution will come along, and the dollar will be losing so much value that then something called Thayer's Law will kick in, which is people just will abandon the dollar. It's like, why the hell do I even need that? Everything's priced in sats. I can use Lightning. The dollar will disappear naturally. But I agree with you. In the interim period, as we move from where we are today to, buying things priced in satoshis, there's going to be a need for a payment layer, and the dollar serves that layer very well right now. And you're going to see, I've seen guys and companies and apps where you can basically store your money in Bitcoin, and then very quick, and actually you can do it in gold too, and then very quickly convert it into dollars to make payments, to put it on a debit card or to pay a credit card with. So, and that will continue in my view, and there'll be more and more of those kinds of solutions.
Yeah, and I think the kind of ground up example of this is just the dollarization of emerging markets, Tether,
yes.
Right? Because that's, in my view, it's kind of the same jump as people in the Western world going from the dollar to gold or Bitcoin. It's kind of a similar quantum leap to go from the Turkish lira to the dollar, right? There's kind of a similar magnitude between the two. And whilst their governments don't want them to hold these things and they'll try to block it, people are naturally selecting a harder money by default.
Exactly. Gresham's law kicks in, and they realize that lira's losing value, and this has been going on for years. I mean, it's funny. I mean, we talk about the monetary problems we're having in the United States today, and I have friends who are from South America, and they're like, "Hey, guys, I mean, this isn't new. I mean, we've been living this story for 50 years. I mean, Brazil, Argentina, Chile. I mean, they've had enormous currency devaluations constantly, repeatedly." And so this is, what's new about this one is that it's the biggest country with the most guns and the reserve currency, and that makes it kind of dangerous, tricky, and scary, but not so if, in my view, not so, and the book talks about this, not so if you move towards a sound money standard. I mean, I know owning Bitcoin and gold, I sleep well at night knowing that I'm not going to get poorer over time. Whereas I think the average working person is always worried. I mean, the stories I think are so sad are the people who can't. I know people who can't retire because they have the house paid off. They're 60, 70 years old. They've got some savings. It's not an enormous number, but one would think if inflation didn't eat them alive, they'd be fine for the next 20 or 30 years they're going to live. But they don't know what the inflation rate's going to be, and they're looking at it and saying, shit, I might run out of money, right? And
I mean, even us, like we're a business, and if we've got cash flow, eventually, if you just get storing money, you're eventually going to hit your insurance limits, and you're like, well, I have to get out of the money because if the bank goes kaput, which here in Australia, right, we've got a housing market that at some point in the future just has to explode. Therefore, your banks are going to go down. You're like, I don't want to lose my business savings. So then you're forced to go and speculate for a better term.
Yeah, exactly. You're forced to speculate. I mean, this is what Saylor said when he started the strategy at MicroStrategy. He just said, we had this cash balance and it was losing 7% of its value every year. And what the hell was I going to do? I mean, it just doesn't work. I had to find a solution, and he did. Thankfully for all of us, because he's been such a great leader.
Yeah, absolutely. Well, Larry, this has been fantastic. I mean, it's the world is changing. There's a lot happening. And my view is that 2025 is probably going to be a choppy year as the world adjusts to it. You've obviously been in markets for a while. What's your, for people listening, just the average person, what's kind of some advice to just survive what is probably going to be a pretty tumultuous but very interesting period? How do you navigate a fourth turning as an individual?
The book talks about this a lot, but I think that, I think leverage in general is dangerous because none of us really know with great certainty what's going to happen. I remember, back when Plan B was talking about Bitcoin going to 150 and all these guys got levered up and then it went down, they got blown out and they lost their coins. So I think that having some sound money is a good strategy. I think the soundest money obviously out there is Bitcoin. I think the second soundest money is gold. I think in the book I said, I'm not giving anybody investment advice, but it sure feels to me like if you don't have kind of 25% of your assets in sound money, you're gonna feel regret. I mean, you don't have to have all your money there. You can have some cash, you could have a house, you could have stocks, whatever. But and then I think just kind of sit back and watch things unfold. I think that if the next 10 years unfold in the way that I believe they're going to unfold, there's going to be a marked difference between the people who took the time to understand what a sovereign debt crisis is, what it means, and then to position their investments in a manner that would protect them from that crisis. And so, there will be people who are wealthy today who have all their money in bonds or stocks and don't own any gold, don't own any Bitcoin. And I think they will be, on a relative basis, not nearly as wealthy in 10 years. And then there'll be other people who are 100% gold in Bitcoin and, maybe not so wealthy today, but they're going to watch that amount go up 10x or more, 10 or 20x. And that, that's going to make a really meaningful difference in their life. And so, that's kind of the message of the book, that, given what we know about the system and how it's set up, it makes this a relatively, I haven't seen many investment choices that are this certain and this easy and this asymmetric. And one of the things I would say about Bitcoin that I really like, so I've been an investor in companies for years, and it's hard to pick companies. I mean, you don't know what the next NVIDIA is, and I think I'll say they're going to be the next one, but you never know. And the management teams run them, and the management teams can screw them up. There are decades where they don't do very well. I mean, Apple's a great stock today. There was a time when Apple was a very poor stock. It was very mismanaged for a period before they bought jobs back and stuff. And so, you've got a lot of, the beautiful thing about the Bitcoin network is there's no management. It's just this protocol. It just keeps running.
It just is.
And they can't F it up. You know what I mean? So here you are, you have an asymmetric investment opportunity that has the upside of the next Google or the next Amazon, and yet you don't have the risk of a management team blowing it. You just got this protocol that keeps running. It's like, oh my God. I mean, it just gives me so much joy to be, in this area and to have a lot of assets in that category, because I just know how well that category is likely to do. And so, and that, that it takes away, I think I think a lot of people go through their lives this way. They're just kind of worried about money. It's a very common human condition. Do I have enough money? Am I going to, it's just a worry. And, it's very, if you can get to the point where you can kind of sweep that worry off the table, it's not about being super, super rich. It's more about feeling like you've got predictability in where you are. And you're playing in a fair game, and the game is set up to benefit you, not hurt you, which is, all of those things I think are true of Bitcoin. then, oh, wow, that's good. And it's like, oh, great. My savings aren't huge, but you know what? They're going to go up in value, and, let time do its thing. I mean, I say to young guys, sit down with a calculator and do compound returns, and put in a number today and grow it at 8% or 12% or 15% and let 10, 20, 30, 40 years go by. Guess what? The numbers get really big, And that's how wealth is kind of created. And so, by foregoing that consumption today, by foregoing that flashy car, that flashy watch, in your 20s or 30s, you've got a much higher probability of having an extremely comfortable 40s, 50s, and 60s. So that would be my advice. Yeah.
No, and the thing is, get rich slowly, don't get rich quick, because
that's the
if
other
you get
thing.
rich quick, it just doesn't play out.
No, that's right. I mean, that's one final warning. I'm sure you've told everybody this, but just stay away from crypto. I mean, just any, Bitcoin, not crypto. This crypto stuff and the gambling and all that stuff is just, I know some people have made a little bit of money doing it, being very nimble and fast and lucky, but for the average person, you might as well play the lottery. It just doesn't, it's not going to work. And so I would advise against it.
And it's one of those things where a lot of people say, "Oh, but I'm not going to get 100x in Bitcoin." It's like gold.
No, you're not.
Just went up $6 trillion in market cap in 1 year.
You're not going to get 100x, but guess what? Sit with a calculator, put in the amount of Bitcoin, put in the dollars you've got, get a financial calculator, put in present value of the dollars you've got, enter periods of 10 or 20 or 30 years, and grow it at 25 or 30%, which I think Bitcoin will easily achieve. And ask yourself, if in 10 years I had this amount of money, or 20 years I had that amount of money, how would I feel? I think you're going to realize that the numbers are pretty big.
And then you've got to handicap it with the probability of this happening for Bitcoin is increasingly high. The probability of hitting a home run in crypto is very low, and you've got to factor in many, many zeros.
Yeah, that's right. And taxes along the way as you trade it and stuff. I mean, that's the other thing. I mean, I highly recommend, tax-free accounts. I mean, that means you've got to buy an ETF, sadly. But, well, actually, you can get self-directed IRAs that will allow you to buy native Bitcoin. But, if you can avoid the tax burden. But again, at least although they've talked about trying to tax unrealized capital gains, I mean, they still haven't. I don't think they'll ever do that. And so, as long as you hold the asset and don't sell it, and as you know, there'll be solutions where ultimately, if you want to continue to hold the asset, you'll be able to borrow against it cheaply, and that's coming. So, yeah, it's look, to me, it's grab some popcorn and watch the fireworks and feel happy that you found an asset that will give you comfort and protect you financially for the next 20 years. I mean, that's my view of it. And if you don't believe that, fine. But, understand, take the time to study and read my book, read Lynn's book, read Jeff's book, read Safe's book, and, with a critical mind and critical eye, and say, and if you still conclude we're wrong, fine. But I think if you do read those books and you study them, I think most people will come to the conclusion that, gee, these guys, it sounds like these guys might be right. And therefore maybe, and I tell my clients, I got a lot of older clients, I say, look, I'm not telling you to put all your money in Bitcoin. I'm just telling you to have some money in Bitcoin. Because if this thing goes up 10x and then a 10x again, which is 100x, you're going to experience real regret. If I told you to buy it and you didn't buy any, even $10,000. I mean, $10,000, 10x, it's 100, and another 10x is $1 million. Most people, not everybody, but most people can find $10,000 somewhere. And I think that 10x and 10x, I think those are within a 15-year window.
Yeah, it's kind of wild stuff. Larry, thanks so much for coming on. Tell me where they can find the big print. Where they can find
the big print's for sale on Amazon.com. I should answer some questions because I had a lot on Twitter. So hardcover, paperback, and Kindle. Finally got the Kindle right. I apologize for the screw up there. The first Kindle file wasn't very good, and the second one's good. The Audible is on the way. Should be out very soon. So you'll be able to listen to it in your car or when you're traveling. And then ultimately the website will be up, and there'll be a way to buy signed copies and buy books in bulk if you want to hand them out to a group. At a reduced rate, so you have to pay the full price on Amazon. So those things are coming, but I literally, the book was out. It's been out 1 week now. So, and it was gargantuan effort to write it and get it done and get it laid out and all the above. And I still had a typo or two, but we're getting those fixed. So, and I'm just relieved to have it done. But all that other stuff's coming. So.
Fantastic. Well, thank you for everything. Because I mean, like getting your thoughts of just someone who's seen these cycles before is just invaluable. Certainly for someone like myself.
I really appreciate that. I'm sure I'm going to see you. You're coming to Las Vegas this year, right?
No, not Las Vegas, but I will be in Cheat Code, the UK.
Oh, you're going to, I'm thinking I'm probably going to come to that. So
I want to go and see the football. I want Pete's taking the football.
Yeah. So just so people know, I'm happy to sign books. I will be at Las Vegas. I will be in Prague. I'm going to Dallas for Bit Block Boom. And Cheat Codes, I'm on the cusp of Cheat Code, but I'm probably going to do that one too.
Good on you. Thanks, Larry. Thanks for coming on.
Thank
really
you. Nice to see
it.
you. Take care.
Cheers.